Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement here on our show. Our show was all about building up wealth, understanding the world today, and navigating through retirement. The show has been in the air since 2006. It's just incredible. We'll be coming on our 20th year here next year. One of Houston's more popular financial shows, and always talking about helping you build up wealth. Our motto and our philosophy is to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively and then invest it conservatively. You know, we started the show nearly 20 years ago talking about savings because at the time the savings rate had plunged and it was close to 1%, and the savings rate elsewhere in the world was much higher. And since then we've kind of continued to build on that point and to help you save money and understand the world today. This is one of the things we're really dealing with the war with China now. Is our savings rate in the United States is much higher, is much lower than the rest of the world. The Chinese save 2 to 3 times as much money as percentage as we do. The savings rate at the present time is it's about 4.6%, which isn't bad. When we started the show, it was 26. It was in the 2% range. October of 26, 2.4%, and that's when we started up the show talking about it. It was in the 2s, so it's gone up. Back in the 60s, it was 10%. And so in many countries around the world, the savings rate is 2 to 3 times. So it's important. Going forward, we're going to have to fund more and more of our deficits. We have a deficit, our budget deficits over the last 4 years have been running 6.5% of GDP. That can't continue, or the economy is going to fail. The financial system is going to fail. And we're going to probably end up in a hyperinflation that's going to wreck everybody's financial situation. So you've got to save money to help out. You've got to save money to protect yourself. You need to save money for retirement, and you need to save money to build up wealth in a very uncertain world. And so remember, save aggressively and invest conservatively. Let's take a look at, I got a couple things I want to talk about here on the show. And it's fascinating. A couple things going on here is if you look at the Michigan consumer confidence number, it's gone from at the beginning of the year to 72 down to 57, and which is kind of disastrous. Goldman Sachs, the business optimism number has plunged as well down. Last year it was probably in around 30, and now it's like a negative, maybe 5 or 6. It was close to 10 back in 22 when the Fed funds was at 5.2, and now they're about 5.5, and now they're about 4.3. Things aren't bad. So what's going on? But if you look at employment numbers, if you look at GDP, things aren't that bad. And so the issue is what's happening. And one of the things that appears to be going on is we got two groups in this country. We got the Republicans and we have the Democrats. The Republicans but they're pretty optimistic. The Democrats are convinced the world's going to end. They're convinced we're going into depression. They've listened to the mainstream media. And what's happening is certain groups in this country, particularly CEOs, they all talk to each other. They all want to sound politically correct. Democrats, they're all freaking out. They're cutting back their spending to some extent. And some of them are selling stocks, and it's just they seem to almost whip themselves into a frenzy, and it's hurting the economy, and it's being done by the mainstream media, CNN, MSNBC, all the different left wing groups. They're just in a complete frenzy, and this is what's kind of slowing the economy. President Trump is negotiating on tariffs. And his job is made tougher when he's trying to present a united front in the United States, and you got the Democrats running around claiming the sky is going to fall in the United States. It's the end of American exceptionalism, and everything else. And it's a very strange market out there right now. It's a very strange world. It's very bifurcated. But what I want you to understand is look. What we think is happening are big changes, and we're writing about this in our Max Out Savings Report, which is going out over the weekend here. President Trump was put in place, was elected by an electoral college, got the majority of the vote, with the mandate to restructure the United States of America. Going into the election, we had 40 years of 6.5%, 7.5% negative. Budget deficits, which you never ever see in wartime, except in wartime. We had a good economy. They were just spending money like crazy. Joe Biden ran the debt up from about $24 trillion to $36 trillion in 4 years. It was a complete disaster. He declared that there was no borders in the United States. Anybody that wanted to come into the United States could come in. If you're a terrorist, you could come in. If you're a Chinese spy or Russian spy, no problem, come on in. There's no vetting. So he basically affected, he realized George Soros's open society dream of a world with no borders. So we had a country with no borders. We had a company recklessly spending money. We were spending $1 trillion. We're borrowing an additional $1 trillion every 100 days. And things were completely spiraling out of control. Our education system was in a state of collapse. Our medical system, which was probably the best in the world, but we spend 2 times what any other country spends, and then somehow our life expectancy is less than most developed countries. I mean, you're like, how is this possible? We're spending more money than everybody else. So what's going on? So everything that the government was near was failing. The education system was failing. The Chinese were out, lapping us all. In the 1920s, we had a better education system in the United States of America than we have today. I mean, think about that, and just look at the numbers. Look at the performance of the people then compared to the performance of not the top, 5% of the country, but look at the performance of the country overall, and it was better in 100 years ago. So everything the government was touching, spending was out of control, was failing, and so he's come in with a mandate for big changes. This is going to upset things. This is changing the world. So what we're doing, they're going to probably cut 5% of the 3 to 5, 6% somewhere of the federal employees. The Doge Commission is going around cutting spending. They found $150 billion worth of government spending already, and it's still going to be ramping up. And they've only been in existence 100 days. They've been in existence for 100 days, less than 100 days in this administration. They've already found $150 billion worth of spending cuts. So we got to cut government spending. We've got to cut the number of employees. Every major business organization in the United States of America over the last 25 years has gone through at least 3 major restructurings or more. The United States government in the last 25 or 30 years has done no restructuring, has done no cost cutting, has done nothing but continue to grow. And so these again, these are big changes. We've got a $36 trillion deficits. We're spending money like it's, raining money from the sky. That's going to come to an end. We have to stop that. What are we going to try to do? We're going to try to grow the economy. So President Trump is bringing factories back to the United States. We've had industrialization was basically a policy of the United States government under Democrats and Republicans. They didn't all care because it was a good deal if you shut down a factory because the company could move the factory overseas. They could cut the price a little bit on the product, so you got a little cheaper product, but their margins went up even more, so they made more money and the stock went up. So it was actually a good thing to shut down all the factories to boost margins, to boost stock prices. And you're like, wait a minute, we don't have any men, so we're losing jobs. But it was even worse than that. In the event of a war or a pandemic, all of a sudden we didn't have the necessary things to protect us in the pandemic because everything was made in China. In a war, we're in trouble. I saw the remark the other day about, China was moving into gold and Bitcoin, and my comment was, yeah, the minute war breaks out, the first thing to go down is going to be the internet, and if an EMP attack happens, that Bitcoin's going to be effectively worthless. We have to prepare for that. In the 1950s and 60s, they prepared for it. And yet today, nothing is happening everywhere in government. President Trump is there to change things. You got to break some eggs to make an omelet, and they're just freaking out about the broken eggs and not looking at the positive. But these are big changes. We've got to get so they have a plan in place. As we said, the plan is what we're going to do is we're going to cut. Look, we got this problem. Spending's out of control. The borders are collapsing. Everything's going wrong in the United States. What do? Well, we got to first get the people in place. President Trump puts in the best cabinet since Franklin Delano Roosevelt. This is a cabinet, as I've said in the show numerous times, typically a cabinet, you got 10 or 12 cabinet officials, maybe a 15 cabinet official, I don't know what the number is. Typically there's 4 or 5 stars in the thing. And then once you get beyond that, there's a bunch of political appointees or people that just gave a bunch of money in the campaign. This bench in this cabinet is deep. Okay, if you look at, you got to have a bench if you want to win an NBA championship. You got to have a bench if you want to win a Super Bowl. I have a theory in sports: you never win a championship unless your bench steps up. I'm absolutely convinced that's the deciding factor in most championships. You got to go through, to get there. You got to go through the playoffs and stuff. You have to have. If you don't have the bench, you can't do it, because eventually some of the guys fail, they tire a little bit, they have some off days, and that bench has got. Trump has a very, very deep bench he's put in place. They're making the big changes. First thing he does, shuts down the border. I think they gave out, the number was like 40,000 exemptions to get in the country in 1 month. I forgot what the number was. I'm off by a couple, maybe even tens of thousands. But recently they gave out 20 extensions along the border to get in the country. And those were basically medical things where, hey, clearly have a medical issue. Yes, you can come into the United States. They're not messing around. The border's shut down. They're laying off workers. They're firing workers throughout the government. That's number 2. They're cutting expenses. $150 billion worth of expenses cut. Okay. Number 4, they're going to be cutting regulations. Okay. They're going to cut red tape. You can't bring factories back to the United States if they're going to take 5-10 years to permit the factories to get them back in there. I don't know if you remember when Elon Musk tried to build his factory in Germany. They delayed it a year and a half just because they had to cut down some trees in the area that he was going to build the factory. It was unbelievable. We can't put mines for critical earth minerals if we can't get the permits to put the mines in, and there's endless appeals, and they take 10 years to get the factory. Those things ought to have to be changes. President Trump has talked to major corporations in countries around the world. He wants the factories back in the United States. Now, how this is going to play out with the tariffs, in some cases, he's going to cut the tariffs, but the deal's going to be, okay, we'll make part of our cars or whatever, we'll make 50% of them, we're going to put a factory in the United States. He doesn't care if we import some stuff in, but he wants to see factories in the United States. I've used the number that President Trump has $500 billion worth of plant and equipment. $1 billion worth. Now, by the way, his number's $1 trillion. It's probably going well above that. Now, I'm using a very conservative. These are all big, massive game changes to restructure the United States. It's going to affect your retirement. It's going to affect your investments. It's going to affect everything. We're going to talk about that after this quick break right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400 or visit maxoutsavings.com.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
We return now to the Max Out Savings Show. Here's Ted Gioka.
We're just talking about the big changes that President Trump has put in place, and where things are going to make a difference, where he's going to restructure the country, and where he's going to get things going in a different direction. And this is exciting, but it's leading to dislocations. There's a huge battle back and forth on this. But as we talked about, the plan is close the borders, bring the factories back, cut back spending, government spending, huge layoffs of government to cut the spending, cut the regulations to get the factories back quicker, and push down interest rates. These are all big things that are in place to make these big changes. And so looking at it from here, what we've seen is we've seen, this is causing dislocations. I mean, people are freaked out. The media is running nonstop coverage on this. President Trump is trying to get these negotiations done, and I think he will. But it's a battle. But it's going to reorder the country. Things are going to be built back here in the United States of America. So he's achieved most of these. The things he has to do now, he's got to get a budget in tax cuts through Congress. That's going to be probably in June. And the other thing he's going to have to look at is going to be the regulations. He's going to have to cut the regulations. They're working on that. Remember, if someone agrees to build a factory back, it's got to be fast-tracked in. The permitting's got to be fast-tracked. I mean, we kind of saw what one of the things with the fires in Los Angeles. The fires in Los Angeles happened, and they're like, well, it might take 5 or 10 years due to the regulations and the permitting, and which is it's just inexcusable. It is what it is. You streamline your permitting and you get the job done. There was an attitude, particularly in the 60s. It really came out of World War II of kind of get it done, get her done, so to speak. And anytime there was a problem, the government would spring into action, and they would move heaven and earth to do it, and they would plan. I mean, even for wartime, they were always planning, and there was, bunkers everywhere, and they had civil defense drills, and it was, you had to go under your desk in case there was a nuclear attack. But there was planning. I mean, it's like that's all going out the window nowadays, and we have to go back to that thing. So when something had to get done, they would get it done. I mean, they had to do it. I mean, in World War II, they started needing to building ships. They didn't have much of an industry at all. They converted the auto industry into making tanks and planes and different things. They did what they had to do. You saw little of it during the pandemic, when corporations actually be able to build out ventilators very quickly, but it can happen. You can put the factories back into the United States. I mean, but you have to have. There has to be the government has to move in that direction, and that's what we're doing. So let's take a look at the markets here. The markets. It hasn't been the best year for the stock market for a couple reasons. Because this is kind of upsetting. It's going to affect if you sit and look at if you sit down and analyze this over the last 25 years. We brought China into the World Trade Organization, and then basically have taken over manufacturing, and this was a great deal for corporate America. They moved all their factories overseas. Their margins went up, and for various reasons. Maybe it was labor, maybe it was tax savings, whatever. So and they cut the prices of things to make them cheaper because they said they couldn't compete. Well, they had to compete, but what they never told anyone was, well, this is helping our margins as well. And so this is why the S&P 500 is down 6% year to date, because in many stocks are down 20, 25, 30%. Many of them, many stocks are down 20%. So they had to get this. It was very profitable. I give an example: PepsiCo. I mean, this is a classic example. That most of the concentrate for Pepsi is made in Ireland. You go, well, why would you make it in Ireland? Now, clearly, Ireland is not, Ho Chi Minh City where they're paying people, $1.50 an hour to produce Nike shoes. It's a high cost area. So why is it over there? That's because Ireland came up with these special tax rates. And so they reduced their tax rate. We're going for Ireland. Well, look, that's not acceptable to the United States of America. You're not moving your factories out of here so you can sit there and take advantage of a tax break somewhere else. We're going to put a tariff on you to even the taxes because we want the factory over here. It's as simple as that. I mean, this is what we're doing. So now Coke has many of their concentrate plants in the United States. They're not as hurt. All of a sudden, PepsiCo is looking at a 25% tariff. So the tariffs aren't just for labor. They're not just, but they're for taxes. They're for special government subsidies. They're for VAT taxes. They're all types of different things. I do business with some companies in Europe, and I still don't understand the VAT. They're like, Ted, we've got hundreds of thousands of dollars in VAT credits. I'm like, what is that? I don't even understand what it is. But I understand what the VAT is, but I don't understand the rebates back. It's very complex. So these issues. So what President Trump is, he wants to level the playing field. In a war, we're in trouble. We can't make our products here. It puts the country at risk. And the country, we're not going to put ourselves at risk anymore. And so this is big change. So this causes issues. This is why there's a lot of angst out there right now. And so, but this is for the betterment of the long term of the United States of America. It's time the United States of America plans for the future, for the long term best interest of its citizens, its young people, and not the quarterly returns of the S&P 500 or some quarterly returns of some big company. Apple's profited mightily by moving their factories to China. Now they're moving to India. You're like, wait a minute, your gross margins are 42%. If you look at Dell, if you look at Lenovo, if you look at Dell, Lenovo, and HP, their gross margins, their computers are like 23%. How come you got such big margins? You can clearly eat some margins and move your factories back to the United States. Well, their solution is to go to China, but that's another story. So this is a big. What I'm trying to get to you today is this is a massive undertaking President Trump has taken on. The restructuring of government, shutting down the borders, the reshoring and the reindustrialization of the United States of America. At the same time, dealing with $36 trillion worth of debt and out of control spending. He's got a lot on his plate. He's put together, as we said, a blue chip team with a very, very deep bench to do it. So things are going well. Now, people are panicking out there. As we said, inflation expectations are the highest since 1981. Well, how is that? I mean, candidly, how is that possible? We just went through 9% inflation. We got like 3%. And everyone, the inflation expectations are 9%. This is the mainstream media. I want you to understand, working people, they're getting in this. They're understanding this, and they're moving forward. Democrats in the East and the West Coast, they're freaking out. They're losing their minds. Corporations that are all talking to each other, big CEOs, they're panic-stricken because it's going to hurt their margins. But working people understand it. They understand the value, and they're supporting Donald Trump. Now, interesting, I just said that the market is down 6% year to date. Here's something fascinating to me. If you look at the S&P 500, let me pull up a chart of it here real quick. It's come back after plunging. It was down 14% at one time, and particularly when President Trump announced the tariffs. He announced he called it Freedom Day or something like that, and they put the tariffs on. Well, they were telegraphing this thing for months that we're putting tariffs on. Nobody believed them. And then if you listen to people inside the government, they're going, look, President Trump is serious. I don't think people understand. You kept reading that. This wasn't like a surprise. But I think Wall Street has convinced themselves that, hey, we know the government's always going to bail us out and do what's right for us, that they didn't expect it. So the market plunged from about 5,700 on the Dow, on the S&P, down to 4,800, a massive drop within 4 days. So this is the interesting thing. This was individuals sold some stuff, but it was hedge funds sold over $1 trillion worth of investments over the last couple months, $1 trillion. So it was the hedge funds that were all panicking. It was the hedge funds that were dumping, and there's not enough liquidity on any market in the world, even with massive stock buyback programs from the big tech companies. This is something we've been saying for a while, to withstand when everybody shifts from one side of the boat to the other. I mean, it's amazing the boat didn't capsize. So this is mostly big institutions that had too much risk on the table. They were wrong. And this is why you saw different things. We were actually up substantially, and then we went back to even, and then we went back up again right after that, just because hedge funds were dumping everything in the world in panic. So what I want you to understand is a lot of the stuff we're seeing is panic from hedge funds. It's panic from Democrats. The solid middle class, the working people are holding strong. Employment is holding strong, with the exception of government. And so this is just going to take time. Now, is the market going to go up from here? Look, I think it's going to be a tough road to hoe up until they get a budget. A couple things that have to happen here. We have to have trade deals. We also have to have what am I trying to say? They have to have the tax, the budget put in place sometime in June, July timeframe. They're going to have that. They're going to be up against the budget, the lending cap. And so there's, the Democrats are going to try to they're going to try to yell and scream that, it's going to collapse. We're going to get downgraded. There's going to be rumors of downgrades and things like that coming up. So all of these things are happening, and that's going to kind of spook things. But what you have to understand is this is for the best interest of the country. What are we getting out of this? We're going to get closed borders. We're going to get smaller government. We're going to get a more efficient government tied to the people. We're going to get the reindustrialization of factories back in the United States, and hopefully we're going to get lower interest rates. Those are all real, which means it's going to be higher unemployment. It's going to be higher wages. Will the price of some things go up? Yes, but look at what you're getting in return. You're getting a much, much stronger United States of America, and that's exciting. So we're seeing these things happen. It's going that way, but it's going to be difficult. Market's down 6%. Some things, gold is up 30% year to date. Oh, well, I'm not sure if it's up now, but it's up close to that. Silver's up. We've been talking about these things. We've been talking about commodity prices. We're going to say, guys, look, the Magnificent Seven are really way overvalued. Their margins are going to come down. We've been saying this for a while, and sure enough, they've had horrible performance year to date. I don't think it's all over with a lot of these companies, the big ones. Apple still has to deal with real margin issues long term. They're going to have to move their factories, which is expensive, and the Chinese are mad now, so they're not buying as many Apple products. That's just one thing. Google's dealing with antitrust issues. They're dealing with some funnies. I remember years ago I sat down with a friend of mine. He was running the antitrust for Google and said, they can't get us. We've got a solid case, da-da-da-da-da. We went on and on all night over some wine going over this. And they were very confident, that they could beat them. The same thing with Facebook, Meta. Meta is in the courtroom right now about buying Instagram and these others to eliminate the competition. So across the board, you have these different things. If you look at this market, it really peaked almost around the time the DeepSeek came out, which at the time, which is the Chinese AI, we said, hey, look, this is over. This is going to change everything. And sure enough, it wasn't that the Chinese were that much smarter than us, but they just thought like Americans and say, how can we make something more efficient? And everyone else, they thought, hey, we'll just control the AI, and there'll be basically 5 of us controlling all the AI, and no one else will get it, and we'll make a fortune. Well, the Chinese just went around them. So there's a lot of big issues with all the big tech companies. Are there some values in there? Yes, but it's going to be more to manufacturers that can make money in the United States. The companies are going to do well going forward. I'll tell you what, let's take a quick break and we're going to discuss this. And what do you do? What's going to happen with interest rates? And where do you go from here? We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com.
Hey everybody, Charlie Kirk here. Ted Gioka, the founder of Max Out Savings Advisors, always says, save aggressively and invest conservatively. He specializes in helping people grow their retirement account with as little risks as possible. Ted combines working knowledge with the intuition gained from over 25 years of experience of value investing in the stock and bond markets for retirement accounts. Like you, Ted is deeply conservative in life and in his investment approach. His risk strategy allows him to anticipate market downswings to protect your money. Ted is also the conservative host of the Max Out Savings Show. You can listen to him every Saturday morning at 10 a.m. right here on The Answer. If the idea of saving aggressively and investing conservatively appeals to you, the best way to get to know Ted is to call him. The number is 713-627-0400 or visit maxoutsavings.com. That is maxoutsavings.com. Call Ted right now, 713-627-0400, or visit maxoutsavings.com.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com.
AM 1070, The Answer.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking about the big changes happening in the United States, how this is going to be bullish long term, but we're dealing with an area of consolidation. We're dealing with changes. We got corporate earnings coming out starting last week. They're going to increase this. Do we have a caller? Okay, guess not. Okay. So what we're looking at here is that we're going to we're in a period of turbulence now, and you use these pullbacks and back and forth to take advantage, to restructure the portfolio if you're on the wrong side, and to get into what's working. As I said, the precious metals look interesting, although we might, we're looking at maybe trimming some of our gold positions just because we've done so well in here. I don't think silver's moved yet. I like copper. I still think the electrification of the world, the AI, the electric cars, just all of that stuff is going to increase demand for copper. We like that sector. We're looking at the chemicals. They're just completely beaten up in here. We're looking at a lot of things in there. And again, we're looking at the restructuring of the United States. That's where we want to be, and that's going to be the opportunity. I think the stocks of the big multinationals that profited by basically shipping their plant, their equipment overseas, and then maybe it's growing overseas and their products, it's coming back to the United States. United States companies, defense companies. We're not quite there on the defense yet. I think there's going to be some more restructuring in that sector. I think once they start changing the rules in that sector, it's going to be very good. Those are the type of things, companies that like in the food group, some of the European companies are a little more interesting because they're already changed. They've changed their products up to meet what RFK and it wants to do with to make our food healthier in the United States. All of these are bigger trends, but this is going to be a blue collar nuts and bolts stock market for the next 5 to 10 years. It's the technology is going over. There's an interesting story. There's a company, and I forgot the name of it, that they're making electric pickup truck, and Jeff Bezos is involved in it. And it's going to be electric pickup, but it's going to be a very simple pickup truck. And so it's like it's going to have crank handle windows. It's going to have, it's not going to have big electric, screens with everything. It's not going to have all types of fancy stuff all over the car, not a lot of electronics. And so it's just going to be a bare bones type of truck, which, I talked to my brother and he goes, well, work, for workers and stuff, that, for companies that are working and stuff, that's a really positive thing. But then they had Bill Ackman, I think, was like, oh, this truck is coming out. This is so exciting. It's going to be so simple. I just want to simplify my life. There's one of the most successful people on Wall Street saying, oh, what, a truck that's very simple? I love the idea. And so I think people want another big. They want their lives simplified. They don't need the technology has reached the point where it's really kind of causing more problems than it's helping. And so things are going to go back to simple thing, blue collar, nuts and bolts type of economy, commodities, those type of things. So there's a lot of exciting things happening in here. And when it comes, one of the things we had a blow up this week is with interest rates. Where interest rates are going to go when Trump threatened to fire Jerome Powell. In fairness to President Trump, right before the elections last year, on September 18th, the market was high, unemployment was low, and the economy was doing good. It was actually doing better than it is right now. The Fed cut rates 50 basis points ahead of the election, which was clearly political. I'm sorry, but it was clearly political. And then they cut it on November 7th. I think right after the election, or which was already baked, so the market would go up. So he has been political. But look, they got to cut the rates. Right now, we fund about 22% of our budget deficit of our debt is in Treasury bills, very short term. That around the war, London did that after World War II. They were around 20%. This is a high number, okay? And they've got to get rates down. We're spending over $1 trillion a year on interest rates. So, in Janet Yellen, in order to keep long-term rates down for the election, pushed a bunch of the borrowing short-term. So it's imperative we get interest rates down. So I understand this is why Trump is pounding on Fed Governor Powell, because what he has to, they've got to get the rates down to help to stabilize the economy, to make the borrowing look so the debt doesn't grow, so our budget deficit declines as well. The second biggest expense in our government spending is interest rates. So we can cut interest rates down another point and a half. I think you're going to see happen. So I think you're going to see a decline in employment because of the government cut. And I think then the Fed's going to cut pretty quickly. I think a couple other things. What we're going to see is going to be like a mini COVID type of thing, because the tariff is upsetting a lot of international trafficking. So there's going to be a lot of shortages of different things. Not as bad, but there's going to be shortages. Things are going to slow down quite a bit, and that's going to affect things. And so I think you're going to see somewhat of a slowdown in here, and that's going to let them cut the rates. We still like the two-year bonds, because it gives us some optionality in case things somehow go badly to move around. And then in a slowdown, I think you're going to see the interest rates go up on poorer quality credit, which will create an opportunity in investment grade as you get somewhat of a sell-off over the long term to boost your income. So again, I think it's going to be a different world going forward. I think for the next 10 years for retirement, this is how we're viewing it for our clients is it's going to be a choppy market. It's going to be back and forth, and you're going to have to figure out ways to make money. And that's not going to be just parking money in the S&P 500 and let the Mag 7 take you up forever, because that's come to an end. And I think it's going to be much more like the 70s, which is there was a lot of money to be made in the 70s, but you just had to be in the right stuff. And so this is something we're going to watch closely. The question is, I think, look, this trade issue is going to morph into a currency situation, and I think the dollar is going to go lower. It's already had one of the quickest drops, one of the poorest starts for a new year in a long time. It peaked at about 110. It went down, hit 98 the other day. It's come back up, so that's a big drop. And I still think it's about 10-11%. I still think the dollar is going to work lower. And that's going to look good. So we're looking at that as well. And again, when there's currency battles around the world, precious metals, commodities do well. The other thing is with the gold and the silver. The United States has about 365 million people in it. The Chinese have about 1.3 billion people. They're buying gold. You can go to a Chinese bank and buy gold. They buy gold products. They're trying to limit the gold ETFs now. But the gold ETFs last month in China, they put more money in gold ETFs than they did the entire year of 2024. There's big buying in China. So the Chinese now they're buying physical gold. They can go to the bank and they have to apply to take it out. Sometimes it takes long, but they can get the gold. So the Chinese, look, I said 6-9 months ago on the show, the Chinese when gold started moving, I said the Chinese are going to be are the new Americans when it comes to gold. The Americans are the ones that drove gold in the 70s. It's going to be the Chinese are going to drive gold this time, and that's what we're seeing happening. Silver, I don't think silver's moved yet. Look, the gold, they've had a big run. You could easily see a pretty substantial correction here, but I don't think silver's had the big run yet. We're going to see good numbers come out of the gold sector. We're already seeing it. Newmont had fantastic earnings. They beat. And gold is, if you look at gold, since those earnings have come out, they really, just looking at it, it hasn't happened yet. I don't think people are used to these commodities companies having good earnings growth. But if you really look at it, gold started the year at 2,500. And think about that, and then even by the quarter close, it'd gone to 31, and most of the time it was probably about 29. Gold's at $3,300 right now, so it can still correct down, and these numbers are going to be very good for these precious metals companies. So there's like I said, there's going to be opportunities out there, but you're going to have to outthink the market, and I think that's going to be very important. As we talked about, companies that can grow their margins that have pricing power. We talked about PepsiCo. PepsiCo's having a problem. They've run the price of their potato chips up so much. I was listening. The potato chips has gone up 62% since 2020, and they've reduced the bag from 19 chips to like 15 for the little bag. Well, people are like, hey, I eat the chips. I'm still hungry because the bag is so small. The price has gone up. You don't want to be in companies like that. You want to be in companies that, hey, this seems like I got a good deal. Chick-fil-A is an example. It's private, but where you feel like you're getting a good deal on something, and that's going to be the work going forward in this market. This market's going to take a lot more work, but you'll be able to make money in it. I mean, we're having a good year. It's just, we talked a lot about this. If you listen to the show, if you read our Max Out Savings Report, we try to point out some of these things. And one of the lessons I've learned over 25 years in the market, and it's been, I say 25 years because I really don't want to really talk any more than that, because that seems like a long time, but is that, look, when trouble comes in the market, in the markets, when things churn, when the market starts going down in bear markets, it's real hard the best way to make money is to stay out of the way of things that aren't working, to stay out of the way of the trends that aren't working. After 99, it's just my friends bought Cisco for 2 years straight all the way down. I mean, I think it went from like $80 to $15. I'm like, guys, they kept buying. You have to step away, go to the next trend. And we're going to try to highlight some of those. By the way, we're writing our Max Out Savings Report. This is going out over the weekend. If you're not on the list, you can still sign up to get it this week. It's a free Max Out Savings Report. We write about these big trends. But one of the real keys is when things quit working, you stay away from the trend, you go to something else. It's a hard thing to do, but there's a simple way on Wall Street for saying this. Don't try to catch a falling knife. And it's what's that? Oh, okay, thank you. But the reason they say don't fall at catching knife because it's so hard to, when these trends start going down, it's hard to catch a bottom. And so something to think about. You want to keep the savings rate. By the way, there's some stories in the Barron's and the Journal today about you. Look, this has been a very tough year for the market for a lot of people. We've done well, as I've said, but in these environment, you don't want to stop your savings plan. You want to keep on averaging up in the savings plan. Remember, retirement is a long-term business. It's a 25-year business to building up your retirement wealth. And if you stop it for any reason, you badly damage it. And then when you retire, it's just 25 years, you got to keep your money long term. In both cases, you've got to think long term. You don't want to be thinking quarter by quarter. You want to think long term. You want to just keep putting away that money for retirement. And then you want to manage it conservatively when you retire because it's a long term game again. And so something to think about. Anyway, if you'd like to get the free Max Out Savings Report, go to our website, maxoutsavings.com. And if you need some help, and we've been very busy this week, and I've got to apologize. I've got to get back to some people who've kind of been crossing, but go to our website, maxoutsavings.com. You can request a free appointment where I'll sit down with you and take a look at how you're set for retirement, show you how we manage money using our value investing approach. It's completely free. Just go to the website, maxoutsavings.com. That's maxoutsavings with an S.com. Sign up for the free report and request an appointment if you'd like. Hope everyone has a great weekend. And remember our motto and philosophy, which is to save aggressively and invest conservatively. That, my friends, is the key to building up wealth over the long term. I hope you enjoyed the show today. It was kind of wandered around a little bit, but understand big changes are happening. There's ways to take advantage of it. And Donald Trump has done a good job putting this together. Just keep the faith. It's going to take time. It's not going to be easy, but we're going to get a reindustrialization in a better country when we're done. Hope everyone has a great weekend. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
And FM 103.3. The Answer.